The broadcast is now starting. All attendees are in listen-only mode.
Good evening and welcome to today's Beginner Circle weekly webinar. As always, we're going to go over some of the things that we cover in the main market section or in the market pinball wizard. And as always, any questions related to how to use Elliott Wave, new questions for understanding Elliott Wave a little bit better, where to find things on the sites and things like that will take first priority. Without those, then we'll just kind of plow through and take a look at the different indexes and the other charts that we usually look at. Our B wave here is inching a little bit further and more extension, just now passing the 76.4% retrace. That is a very normal retrace for a B wave, but because our A wave was 5 waves down off of the December, January 2022 high, we could not rely on getting such a big B wave. Usually, so we have two guidelines for Elliott Wave that were a little bit at odds. Usually, if you have a 5 wave move down, on one hand, that signals that you have a zigzag, and so a 5 wave, at least a 5 wave impulse, usually only gets a very shallow, often not even more than a 38.2% or 50% retrace as the B wave, and then gets another impulsive or ending diagonal move down as a measured move. Here, we also have a leading diagonal for the 5 wave move down. So while it is 5 waves to the downside, usually the retrace after a diagonal can be wider and or deeper. So that's why we were looking for the possible alternate. We're considering it an alternate back here in the March low of a C wave up and a bigger ABC for that B wave. I have since changed my subwave count to a WXY. And we'll kind of go over the differences when we drill into the subwaves in just a minute of why I'm counting it as a Y wave instead of a more normal C wave. But essentially they are the same thing. It's just an academic exercise in how to divide up the subwaves inside this, but both ways you can get to a potentially completing pattern in a proportionate move into a normal region of resistance, even though we're getting a little bit of extension just beyond it. And we have a lot of things that are still flashing very significant warning signs. I still have this green wave 5 that I've never deleted. But as we've spoken about, since October, really since we failed to hold this low back here in August 2022, the potential to get one more high has been significant as a parentheses wave 5 of the big circle wave 5 off of our March 2020 low. Really significantly had a blow to it when it couldn't hold this low right here. So the lower low in October, not only did that count as 5 waves down for our A wave, it really made this disproportionately way too big to count as the corresponding wave 4 to this wave 2, and looking at this any higher high that's made as a reliable 5th wave still of that primary wave 5. That doesn't mean that it can't still actually try to do that. It's just not a reliable pattern. So if we were looking for that higher high, though, that would be more likely in a diagonal, as I've shown on the Dow chart, and we'll take a look at that shortly, where there's overlap here or close to overlap. So this is a parentheses wave 4 in a diagonal. So that means that the 5th wave should be an A, B, C move up. And if this is meant to be a C wave of a parentheses wave 5 trying for a nominal higher high, that would still need to get a 4th and a 5th wave up and try for nominally higher. That would be above the 48.25 region. But if we're clearly holding a corrective retrace into this, 4,200 to 4150s, then maybe, if that's a very, very clear corrective retrace, then there's a good risk reward off of a potential low forming in that region to attempt, that one more high for that 5th wave. But for right here, I think the risk skew is certainly in favor of a more significant top trying to form in the broad market. So with that, I want to zoom in, start going into a little bit more detail of the subwave count. The only difference here between what I'm showing and what Avi has, Avi's counting instead of a W, X, and a Y wave, we'll highlight that. He's counting this as an A, B, and a C wave. We're still at the normal fib extensions for a C wave or for a Y wave, and he's counting this instead of an A, B, and a C wave up in the Y wave that I've shown as 1, 2, 3, 4, and 5 of an ending diagonal for this C wave. But still the same fib extensions being reached, the same resistance for the parentheses B wave, and the same divergences on lots of different time frames. So what we're looking for now, the most normal thing to expect if we are topping in an intermediate degree B wave, is to get a 5-wave move down as a C wave over the next basically year, probably. So that can play out. This 5 waves down took the better part of a year from January into the October low. We could easily go from, a possible top soon all the way into September or October of next year to fill out all of the 5-wave move down. It could certainly be faster than that. Elliott wave is far more concerned with specific subwave levels and the structure of a move and fib extensions for that move that you're looking for than for specific timing. So maybe because this took so long and this took so long, that this is a sharper impulse. We can't plan for it to be a sharp impulsive drop right out of the gate, especially when no support is broken and we don't even have any kind of subwave pattern off of a high right at the moment. We just have extension. So if we are topping soon, the ideal target for wave 1 of that C wave would be around 4100, actually closer to 4030 in the SPX. That's the 0.382 extension of the C wave. Our C waves, we typically look for 100% to 123.6% extension. So a wave 1 that takes us to just the 382 fits within the expected Fibonacci pinball for a C wave to the downside. And we know that each of these subwaves, particularly if we're looking for an impulse, should be 5-wave moves to the downside. So when we zoom in on the structure here that we want to see off of the high, and again, it could certainly play out much quicker than taking into October or November of this year just to get 5 waves down as wave 1. But we have not actually shown any clear sign of a top yet. So this is what the general shape, I'm going to hide, just move these further out to the side. The general shape of 5 waves down for that wave 1 targeting the 40-30 region would look something like this, with 5 waves down for the first wave 1 taking us down into the mid 4300s, then a bounce, and then another move down, and a bounce, and another move down for the first 5 waves down at a larger degree. We can further zoom in on that potential structure and say, okay, if we're looking for a wave 1 of wave 1 into the mid 4300s before we get a corrective bounce, that ideally is going to be 5 waves down, and that should look something more like this. And then again, you can put in further subwave inside here and say, all right, if I'm going to zoom into a 5-minute chart, I should see 5 waves down inside this initial wave 1. But again, so far we don't really have anything clear off of a high yet. And until we start to break, at least I'd say probably the 4460 region, and then below that, the 4380s, there's still room for this to extend. There's some other fibs up here that it could be trying for. But talking about those fibs in more detail inside whether this is a C wave or whether this is a Y wave, As we said, the Y wave extensions, we are in between the 100% and the 1236 extension. The reason why I like this so much as an A, B, C for the Y wave is that we are right now at just passing the 123.6% extension for this C wave of the Y wave. And then inside that C wave, I have a nice ending diagonal here as 1, 2, 3, 4, 5, and that's reaching this ABC for the fifth is reaching its 138.2% fib extension. All right, so that is as detailed as I can give you from right now on the S&P. What I'd like to do now is take a look at a chart that looks very different from that, and that's the Dow. So we mentioned this a little bit, that if we're not going to count the same primary wave 5 top in December or January 2022, that we're counting on the regular indexes and an A wave to the downside and a B wave that is still trying to make higher high over its December high that I don't think it's, oh yeah, it just did. So still working on some sort of alt pattern here if it is still a B wave. But this could count a little bit differently where we still have to base it on a WXYXZ structure for the fourth wave. But this is a chart where, you know, Garrett and I talked about back in September, October, and definitely again back in March, that if things were going to be trying to make a higher high, a lot of that strength could come from, you know, these Dow names. So off of the March low, there was a setup for a C wave up, the same C wave that we were looking at as a potential alt in the S&P, and that setup was here. The S&P has filled out much more of that proportionate C wave or Y wave as we were talking about. The YM has, or DIA or whatever you use for the Dow, is far more muted. It seems like it is still running behind, and so therefore, because it hasn't filled out as much of it, as long as it's going to hold support, it has room to continue to extend higher. So within this, in stock waves, Garrett and I have highlighted a number of the charts that support continued strength, and some of the ones that look more like a potential B wave is topping. Although if that's the case, I mean, I guess it could be the same A, B, and a C wave for a Y, but just no clearly reliable count for an immediate top here the way we have in the S&P. Moving on to the NASDAQ. Getting a little bit more extension here, and I think the NASDAQ doesn't really need to count as the WXY anymore. I think this extension higher can take this from being the A, B, and the C that we were counting for the NASDAQ, and just count as this 4 and a 5 of a normal C wave that we're looking at in yellow. But otherwise, very much the same count. And not really the best impulse, but it does not have to count as a diagonal. It is going to yell at me though, so I'll click ignore issue. So same structure there. Again, this is one of the things that we did talk about before, is that this could be the larger circle green A, B, and setting up for a C wave of this wave 4. So instead of being a B of a larger primary A wave, particularly if we are going to make a nominal higher high, I'm still going to count this as a B wave, but it will increase the potential that it is the A and the B of all of our cycle wave 4, as opposed to just the intermediate A and the B. So that is the only thing really that is going to change for me if we do continue a little bit higher and make a nominal higher high over the November highs in the NASDAQ. And a lot of other tech, and particularly large cap tech stocks, did not get nearly as much extension and look much more clearly like an ABC corrective flat, still holding into normal resistance regions, whether it's a 50%, a 618, or a 764. They're much further away from nominal higher highs. So it's only a couple of things that have really stretched this as much as it has, mainly semiconductors, which we were very bullish in stock waves from October and from December lows. The last index that I want to look at is something that does look very, very different, and that is the Russell. I think this is almost impossible to reliably count as a fourth wave still, but more than this not being able to count as a fourth wave, making this very unlikely, it counts very, very much like a triangle. The only thing, if it extends much higher, then maybe it's going to try and get further extension up to 2100. And instead of this being a pure triangle, this is an A, this is a wider flat for a B wave, and then this is the C wave for just an A, B, C flat for the same B wave. But other than that, this really looks like a very, very scary looking chart that is at risk of a pretty imminent top. We started looking, we had the potential for this to be 5 waves down, either here or here, and we're looking for at least a corrective bounce, but we're putting the potential on here for this to get an E wave up in the pink towards the top trend line, and we have just recently exceeded that. The only alt that I show on the chart here, instead of getting 5 waves down for wave 1, which is the primary expectation, would be to possibly get an ABC down instead of 1, 2, 3, and have that hold the lower trend line again for a more extended to the side triangle, where instead of it being a triangle that ends as A, B, C, D, E, it gets an F and a G wave, and then tops in that parentheses B wave. So if there aren't any other questions on the index charts, and again, there's some individual sectors that fit a little bit more with that potential in the Dow to have more bullish setups. Maybe they're set for rotation. Maybe some of those are defensive names or quasi-defensive names that have some additional potential. But a lot of things do look like we could be in for some volatility ahead and at least some reversions to means. The NASDAQ has retraced almost 99%. Dave, F and G is just an extension of a triangle. So A, B, C, D, E. And so if that continues to contract, so this can continue to come out like this, this can continue to come out like this. And so instead of getting the standard A, B, C, D, and E of a triangle, you get another F and a G wave. So increasingly smaller ABC moves. You can even get H, I, J, K. But at some point, the triangle contracts so much that there's nowhere left to go except to break out of that triangle. Yes, it is in the Proctor book. Shola says, what if 4 was a running flat? I don't know which 4 you're talking about. You typed in a 4 of this degree, a parentheses, lowercase Roman numeral 4, but I'm not sure if that's the 4 that you're talking about. Yeah, this could be a running flat, but you still have what looks to be a potentially completing 5th wave. It looks pretty proportionate. So, and you could even count this as a larger A wave, and this is a B wave, and maybe look for another 4 or 5. But again, if you get much past this 2009 level in the Russell, I think it's going to try and find some way to chop its way and extend more to 2100, because that really starts to break the upper trend line of resistance for the triangle. And then instead of being a clear A, B, C, D, E wave triangle, the alt in that case would be an A wave, and all of this is maybe a triangle for the B wave, and then trying to get one more high like that. I don't think that's very reliable right here, but if we only get a clear ABC move to the downside for what is either wave 1 or an A wave, that might be a blue wave 4 to try and get one more high up from there. Dave, it's there. I can look for it later. I'm not going to thumb through the Proctor book in the middle of a webinar. Sorry. All right, let's move on to metals. Hold on. There we go. All right, as we have talked about, let's go to the bigger, there we go. Zoom in on this so that we can see the structure nice and clear. In our larger diagonal for gold, off of the 2022 low, again, we have our ABC up for wave 1. We have our ABC retrace for wave 2. We have a very, very strong move up for an A wave. Could even count this higher high as the A wave like we're doing on silver. It really is kind of academic at this point. It doesn't make a lot of difference in terms of the overall fib extensions and what we're looking for. We have what should be holding the 1900s as the B wave, and we now have what on a larger time frame count looks a little bit like 5 waves up, but when we zoom in and talk about the 1 hour chart, we're going to see that this isn't clearly 5 up yet. The other issue that we have with this move is that we want our C wave, this C wave here inside our parentheses wave 3. Because this is diagonal, Fibonacci pinball says that the third wave in a diagonal is going to tend towards the 100% or the 1236 fib extension. And if we get an A wave to the 764, which is 2110, and we came up a little bit shy of that, even if we're gonna count this higher high as the A wave, then we should get to the 1236 extension. Let's see if that changes it a little bit. Not too bad. So we really would like to get more closer to this 1236 fib extension. So based on this, counting this as 5 waves up for the A wave, and this is an expanded flat for the B wave right to the 618, our ideal wave 1 would take us closer to the 2060 region. And then a wave 2 retrace, and then 3, 4, 5 on up towards the 2270, and maybe getting extension into the 2320s. Would be the most ideal for that C wave as our longer term swing. When we zoom in on the structure that we have off of the low, we can see what did look a little bit like a possible 1, 2, 3, 4, 5 zoomed out. Really looks at best like 3 waves up so far. Actually, I'm not going to delete that yet because this can still be wave 1 and wave 2 of a larger leading diagonal, or maybe even an A and a B wave that we have to consider. So it does look like we have what is in process of forming an initial wave 1 off of the low. Dave, please stop taking up space in the GoToMeetings question box with your obsession over the triangles. I assure you it's there. I'll post a link to it later. I don't want to have to boot you off the webinar. All right, so what looks good as 3 waves up could be 3 waves up as either a wave 1 or an A wave in the start of a diagonal. Whether that's A, B, and C up for this wave 1 and the entire C wave is going to be a larger ending diagonal, or whether this is 1, 2, and we get a 3, 4, 5, but would push this further out to the right, but still trying to get closer to that 2060 region, which would be a little bit more ideal as a leading diagonal for that circle wave 1. The other alternative is that instead of getting a bigger diagonal, or whether the A and the B of an ending diagonal, is that we're just filling out as a smaller 5 waves up for a little bit less than ideal. for that wave 1, but we have 1, 2, 3 would want to hold the 1965 to 1960 region as a fourth, and then stretch a little bit more, at least to the 2020 level, for a fifth wave up as a more normal wave 1. When we jump over to the silver chart, we see that same structure a lot more clearly. What is a little bit questionable as 1, 2, 3 in gold very much looks like a 1, 2, 3 of that same circle wave 1 in silver. So would like to see a little bit more consolidation towards the 2450 region, and then a fifth wave up, maybe not as aggressive as a fifth wave as we'd like to see in gold, and then a consolidation back into the 24 region would be the most ideal for 5 up, 3 down, which gives us a very, very high probability start to our C wave of that parentheses 3. So same structures as gold, but silver is looking a little bit better. Now let's move on to GDX. And we can see some very similar structure off of the recent low with gold, but the larger count is a little bit different. So off of the June low, we can have 3 waves up so far, needing a fourth and a fifth wave for the wave 1, and then needing to hold a wave 2. But the degree is different, and this is based on holding a 1, 2, 1, 2 structure off of the 2022 lows. Or maybe the alternative that I have here in purple is that this is a 3, 4, and 5 of a slightly larger version of the same wave 1, and that this is the wave 2. And so if that's the case, especially if gold is going to fill out as the leading diagonal for the larger circle wave 1, then I think that this would be an ABC move up for wave 1 of a larger leading diagonal here in purple. So that's where that alt is going to start to get an edge, is if instead of holding a fourth and getting a fifth wave up into the 34s as this 5 up for wave 1 of the circle 3 of wave 3, instead we get a deeper retrace and probably wider retrace into the lower 30s region, and then getting a 3, 4, 5 for that bigger diagonal. The wave 2 here in GDX came to a 764 retrace. That's deeper than ideal. You know, if our 382, 50, and 618 are the most ideal, but that's a perfectly normal retrace for a wave 2. And when we zoom out, it looks fine also. So 5 up for wave 1, could count this as the alt 4 and 5 of the larger wave 1, but ideally this is holding as a 1, 2 start to the 3. Ryan, we do cover platinum regularly in the Metals, Miners, and Agriculture service. It's not really one of the names that we cover here. I will say the pattern is very different from gold and silver. Starting to come into a little bit more of alignment, but it does look very much like silver off of the more recent lows. So again, want to see more of a fourth wave consolidation hold, and then a fifth wave up, and then a wave 2 on platinum. Before we move on to the other commodities, let's take a quick look at the dollar. I think the dollar can be in the heart of this third wave down, but we don't have the cleanest 5 waves down for wave 1 inside this 3. So it is possible that this larger C wave that I've been looking for in the dollar, that this larger C wave here at the primary degree targeting the low 93 region is actually a diagonal. So this can still be the 1, 2, but this could be working on an A wave of the third, and then getting a B wave bounce, and then a C wave down. So if we drop, but don't extend all the way to the 97.50 region, instead just drop like a nominal lower low and then start to bounce over 100.6, then I'll probably look for another bigger bounce into this 102 region before continuing down as that parentheses wave 3. So Shola asks a question about Bollinger Bands. I do have them on most of my charts. I don't look at them all the time. Sometimes, oftentimes I'll look and see if they're trying to signal something that's a little bit more extreme. If I have an Elliott wave pattern coming into support that should hold and it's poking under the lower Bollinger Band, then that might add another level of something else that I look for. If we have a good bottoming pattern and then it starts to break out to the top side, can view that the way people who look at Bollinger Bands look at a topside breakout as well. But I'm always going to defer to the Elliott wave structure for more clarity and not rely on something that the Bollinger Bands are saying. But it's one of the indicators, along with all the moving averages, that is on just standard on every chart that I look at. This is the 30-year bonds. I think I have pretty much the exact same count as Avi, treating this as an A wave and a B wave into the July low and looking for a C wave up into the 143 to 145 region on the ZB futures. So it says @US hashtag. That's just the data provider's code for the continuous contract for the 30-year bond futures, which trade as ZB. I use this to look at much more detail and fill in missing data that I think is missing from TLT because it doesn't trade as with nearly as much volume and dollar volume as the actual bonds and bond futures, and also trades more restrictive hours. So it doesn't have as much going on outside of normal trading hours as the futures do. Would like to see more of a wave one. We are getting what can count as 5 waves up, and I posted a beginner circle post the other day on how that possible 5 up complicates things a little bit just because of the sizing. A normal C wave for Fibonacci pinball, we would want the wave 1 to target the 382 or the 50 region. So that is 129.13 to 131.15 is the ideal resistance zone for this wave 1 based on Fibonacci pinball. If we were going to hold as 3 waves up for a wave 1 of this wave 1 and fade as a wave 2, then we had a possible leading diagonal structure that would take us right to that 131.15. That was my ideal. It doesn't look like we're getting that. Instead, I'm going to zoom in a little bit more now, trying to get all of this on the same page where you can see the fibs and as much detail as possible, which is what I always do when I frame my charts. I'm trying to give you some context to the prior move. This chart isn't going to show much prior of move context. It's only looking at what we want to see, but it lets the fibs show up here on the side and for us to look at the detail here. So if we have 5 waves up now, that 5 waves up is not getting to our 121.15, so it's shy of what is normally ideal for a minimum for this parentheses wave 1. But as 5 up for wave 1, even though it's only nominally higher than what we were looking at as the blue wave 1 for this leading diagonal, 5 waves up for wave 1 implies that it's an impulse. So you're not going to have a more muted third and an overlapping fourth and then a muted fifth for a diagonal. In an impulse, you're going to have a wave 2 and then a stronger third and then a fourth and then a fifth. And so that's going to take you up past the normal resistance region, even the higher level of normal resistance, which is this 618 region in the 133s. So that for me would become a little bit less reliable as wave 1 of a C wave. It doesn't mean that it wouldn't be 5 waves up and very, very bullish as long as it held a wave 2 retrace. It just makes us start to consider that maybe something else is playing out and it's not just a simple wave 1 and wave 2 of a C wave that's targeting this 140s region. And I'm not going to confuse everybody with all of the different things that it possibly could be. That's just how we look at the smallest degree inside, based on what our expectations and ideals should be based on Fibonacci pinball, and then incorporating with what we're actually getting. We didn't get more of a wave 2 to be reliable as that diagonal, so it makes it less likely that this is a leading diagonal filling out, and starts to lean more in favor of this filling out a larger wave 1 after it holds support from this initial 5 waves up. So Sam asks, Zach, if the individual stocks are responsible for the move of the indexes, are the individual stocks responsible for the move of the futures metals prices, or is it the other way around, i.e. futures metals prices drive the individual price of individual mining stocks? So I think your question, there's a lot of parts there. First, I don't know if it's only individual stocks that are driving the indexes. One of my major concerns for the market in general, and where weakness and extreme volatility could potentially come into play, is what we've talked about a little bit before, that there are 7 to 10 companies that make up a significant portion of almost every single ETF, even for sectors that are supposed to be trying to give you diversification. The same Microsoft, Apple's, Nvidia's, Google's, and Amazon's, and Tesla's are magnified over a lot of the market. So while, yes, certainly individual sectors are comprised of individual stocks, and the market is made up of individual stocks, there are a lot of feedback loops that happen with individual stocks because of that magnification effect that a lot of ETFs have in the overweighting of some of those individual stocks. With regard to the metals and the mining stocks, even Barrick and Newmont, which are by far the largest market caps, they're still relatively tiny. I mean, minuscule compared to the dollar volume and global currency volume that's being traded in precious metals. Mining stocks are basically a leverage play for, and I mean, some of them are more like, exploration plays, but they're a production of that precious metal, and they tend to move similar to the way the metals move, but sometimes with greater amplitude because they, the size varying on the size of deposits and how the companies are run, and the individual sentiment of each of those and how those patterns are playing out. So I definitely don't think that the mining stocks really have much of a bearing on overall metals prices at all. All right, let's move on. Let's take a look at TLT. We can see a little bit of similarity there. Same 5 waves up, potentially off of the low, and also where that fits in terms of a more ideal wave 1. If this is wave 1 and we get a wave 2 to here, and then a wave 3, 4, and 5, that can take us up to only about the 107.70 region, which is not too much higher than what is ideal for that wave 1. So I have less trouble with that on TLT than the concerns that I was expressing on the bond futures. But again, the relative volume of trading, the TLT is based on the bond futures. It is not the dog that should be wagging the tail, or tail wagging dog. All right, let's move on to oil and natural gas. Still looking for potential downside. We talked about how I switched from looking at this as an ending diagonal for a parentheses C wave to looking at it as a Y wave, where this is an A and a B. Now looking for more of an ending diagonal still for the C wave of the Y, ideally targeting this 55 region. We have an initial sharp drop, but it's not clearly 5 waves down. And now we have a wide flat to the 764 and the 200-day moving average, and starting to show some potential signs of weakness, particularly if it breaks under the 73.50 region, then that can start to get more of a drop that looks like this. It should be an A, B, and a C wave down, but there might not be much of that B wave in there. It's going to yell at me because I think I set this up as an impulse initially. So that's what we'd be looking for the third, and then the fourth wave can bounce up. It doesn't need to get much over the 65 region to get overlap, and it doesn't even need overlap necessarily. Now, let's look at QG. Yeah, I wanted to bring up the continuous contract first. No, let's go here. So I cannot count this yet as a very reliable, significant bottom. And even if we were going to rely on this as a truncated end to this parentheses C wave down from the November 2022 high, we're still dealing with the same potential leading diagonal. This is my continuous. This is not back adjusted. So it might look a little bit different from the charts that Jason's been showing you. Nominally lower here, but I think this can still count as the fourth wave, but need to get a fifth wave up to the 320s on this chart to have a possible 5 waves up off the low. And the risk there, even as wide as this is, fib-wise, would only be a 382 retrace of this third wave, and can be an A, B, and that 5 waves up can just be the C wave. So even getting 5 waves up does not mean that you can rely on natural gas being long-term bullish from here. You really need to see it hold a corrective retrace. Now, the back-adjusted chart or the individual months do look different, so that's why I wanted to switch and go to the C chart and see how those compare off of the April low. Okay. So the April low is not a low in the back adjusted. So we have what really counts best as only 3 waves up here, even though it's pretty muted for a C wave. It got close to a 764. That's not so bad. And then we have a possible corrective retrace that can be setting up for higher off of the June low, June 29th low, but only a tiny little move up so far that isn't really even 5 waves. This can be an A, B, and a C. So while this might be a corrective retrace of a small degree, this can also be a small corrective bounce. So I think you do have to worry about this on the back of this back adjusted chart, setting up for more of a drop. And that might fit a little bit better with oil, where this could be an A, this is a B, this could be a C wave down. So that would be my immediate concern on this back adjusted chart, which does, as we said, look very, very different. No, this is QG with a C at the end is the natural gas back adjusted. But it does look very, very different from this natural gas chart that is not back adjusted. Very, very different. All right, any other questions? I think we got through everything that we typically cover in about 45 minutes. So I can get this uploaded for you guys, and see you tomorrow. Have a great evening.